The pace of economic recovery in Nigeria is still very weak, yes, and unable to effectively impact on unemployment and poverty, going by inflationary pressure on economic output and the current energy crisis affecting the economy. Now, going by this, as Nigeria's macroeconomic fundamentals continue to experience headwinds, analysts say that the view of the chances are slim that the Monetary Policy Committee of the Central Bank, ahead of its next meeting, will have to adjust benchmark interest rates to address current economic realities. The meeting, scheduled to hold next Monday and Tuesday, is coming at a time when there are concerns around inflation rate, fragile growth, rising oil price, and the impact of Russia and Ukraine conflict on the economy. The MPC members at the last meeting in January voted unanimously to maintain the monetary policy rate at 11.5%. All other parameters unchanged due to weak growth and inflation concerns. We have him in the studio live. He's an economist and tax manager at PricewaterhouseCoopers, Mr. Abiodun Kayode. Mr. Abiodun, thank you so much for coming to the studio.
Thank you for having me.
Okay then. Of course, Russia and Ukraine crisis will dominate our discussion. And I'm thinking already that this might affect the decision at the coming MPC meeting next week. Looking at all of the volatilities and all of the issues, do you think this will make the committee shift their position, the stance at this time?
Okay, thank you for having me once again. So like you rightly said, the ongoing conflict between Russia and Ukraine, it's actually something that borders every nation in the world right now. And currently, different economies, especially the advanced economies, are already taking positions, right? They're already adjusting their interest rates at the moment to factor in the consequences of the ongoing conflict. As far as Nigeria is concerned, right, if you look at the first Monetary Policy Committee meeting that was held this year in January, there were talks about instances of unforeseen circumstances, global shocks, right? And I think one thing that the CBN would want to do, the MPC would want to do at this moment would be to monitor the situation of things. I think it's too early to want to make an adjustment, right? There are ongoing talks, even though we are hearing reports that it's been stalled between both countries, right? So I think it would be prudent, and I think the MPC would want to hold its stance at the moment. I mean, so considering this is the second MPC meeting that is going to be taking place, we have 4 more that are going to take place later this year. So I think it would be prudent for the MPC to actually take its time, monitor the situation before it actually decides to increase or reduce rates. So I think it's going to be very important for the MPC to actually monitor things.
You're not thinking that the inflation figures and all that we see from the NBS, because at times they try to fight, address inflation and all of that. Do you think that could also have any impact? 15.7%, like we were speaking earlier to Prof. Do you think that could also do anything?
Yeah, so the inflation concerns, it's worrying, and I think it's something they will definitely be concerned about.
Yeah, of course.
Right? But at the moment, one thing you need to realize is that if you look at the component of that inflation, what actually led to the spike, right, was actually core inflation, right? So if you consider core inflation, I think that's the highest in about 5 years, right? So if you look at it, you can also attribute it to the issue of the contaminated fuel that we had in February, right? So this is a very strong thing that led to the spike in prices, general price levels. So I still think that the MPC would want to hold on a bit, right? Like you said, inflation is a concern, and like the last guest you had said, inflation is a concern not just for Nigeria but for all economies around the world. You look at developing nations like the United States, like the United Kingdom, they raised their own interest rates by 25 basis points, all in the with the intention of addressing inflation rates. Their own inflation rate, the UK, for instance, that's a 30-year high. They've not had it that high since 1992, and the United States as well, it's a 40-year high. They haven't had theirs that high since 1982. So yes, it's something that the CBN is actually concerned, but there is something that is also very important to the MPC at the moment. And what is very important to them is also growth, right? So growth is something that is of a key concern to them. If you look at the growth that we recorded in 2021, the growth, like they rightly said at their meeting, was that it was fragile, right? 3.4%, and it's coming at the backdrop of our recovery from the pandemic year, right? So it's not like that growth was achieved as a result of any specific fundamental policy, right? So at the point that the MPC is right now, what they would seek to do is to consolidate on that current growth rate, right? So you trying to increase interest rate at this moment, I don't think that would be the way to go. Then aside that, if you look at Nigeria's situation, our inflation, if you want to address our inflation, you raising the rate might not necessarily address it, right? Because if you look at the cost of our inflation, it's coming more from the supply side, right? We have costs, high costs, right, which we've talked about. So for you to address such things, it's not going to come from you raising rates. You raising rates might just want to attract foreign investors into the country, but actually, if you look at the inflation we're going through, it's more of hiking prices, diesel prices going high. We have the price of cooking gas going high as well, and so many things, right? So producers, manufacturers are struggling, right? They are struggling to manufacture goods, manufacture their products, right, and still be able to stay afloat of business. So it's coming right from the supply side. So I don't think they have anything I don't think the CBN would be the MPC will be so eager to raise rates at this point in time. I don't think so.
Very interesting one. Thanks for that one. Great stuff there. Now, there was a meeting, the IMF meeting lately, and heads of ministers of finance and all of that, African Central Bank governors were there to talk. Now, some specific things I want us to maybe comment around, that's talking about increased food prices, which is something that is happening at the moment. Of course, higher fuel prices. We have that here. Crude oil is about $120. At the time, it hit $130 per barrel. And of course, difficulty in accessing international capital markets. What do you think? Do you think the decisions will shape any of all of this, or will change this narrative?
Yes, so like you rightly mentioned, apart from things going up globally as a result of the conflict and the meeting with the IMF, I think one takeaway from that meeting is that most nations right now, especially developing nations, they have to begin to look inwards, right? They have to begin to find out how they can reduce their exposure, right, to these global shocks, right? Because these are things that are totally outside their control. True. If you look at Africa, for instance, most African nations, Nigeria, for instance, most of our trading partners are with the developed nations, right? What we simply do is that we export our raw materials to them and we import manufactured goods from these nations. One thing that we need to do right now, and most other African nations need to do, is to begin to work towards their improving their outputs, right? Trying to add more value, right? And the CBN, I think the CBN had a very good stance on that with respect to its RT200 FX program that was introduced February 10, recently, right? So I think what African nations need to do, and the takeaway from that meeting, is that they need to look inwards, try to find a way to reduce their exposures to these advanced nations, right? They need to look inwards, develop their products, begin to trade among themselves. I think the Afrexim released a trade report, the African Trade Report for 2018, and it was stated there that intra-African trade is actually happening at 15%. That's quite low when you compare to other regions, right? Other continents, their trade among themselves. So I think it's important that we take advantage of programs such as the Africa Continental Free Trade Area Agreement, the AfCFTA, and we begin to look inwards, build our own infrastructure such that we're beginning to trade among ourselves, and at the same time, we're able to conserve foreign reserves, right? Because I think there's this platform that enables you to pay in your own local currencies, right? The PAPS platform, right? So I think these are some of the things that we need to do in-house, right, so as to reduce our exposures to the developed nations. So I think that's just the takeaway from that meeting.
No, man, I want to stay with all of the contending issues, all of these issues that I know that will definitely pop up. And one of this is the exchange rate issue. We've seen, you've just talked about what the central bank did in February, trying to address all of this. But we still have that disparity between the interbank rate and, of course, that other side. I don't want to say the black market, but I already said that. But we have that problem. And also cost of borrowing. These are things that would affect, and our debt servicing. Nigeria is owing a lot. Yesterday, the debt management office came up with about 39 point something trillion naira. That's about So what are you thinking about all of this issues?
You're quite right, Tolu. You made mention of the reports by the DMO yesterday. So the DMO report actually stated that Nigeria's total debt stock currently sits at 39.5 trillion, and that's quite high. I was reading a report this morning before coming here where it said that every Nigerian is going to be owing about 191,000 naira. If you divide that amount by 206 million, so it's quite worrying. Yeah, it's quite worrying. And so what the way I see the CBN coming in here would be simply to try as much as it can to do something about the ways and means financing. So the ways and means financing is also one avenue through which the government borrows, right? And it's quite high. I was looking at a statistics where it showed that the CBN's borrowings to the federal government, its lending to the federal government actually moved from about 13 trillion in January 2021 to about 18 trillion January 2022, which is quite high. Yes, we do borrow a lot, and even though the Minister of Finance has said that we have a revenue problem. I kind of agree with what some analysts have said. We also have an expenditure problem. We need to curtail the way at which we spend money, right? Some of the spendings that we're actually going into, they're actually needless, right? And we need to try as much as we can to ensure that we can sustain ourselves inwardly. I'm looking forward to seeing the Dangote refinery actually coming up. That will actually save us a lot of the subsidy expense that we're actually incurring. You know, it was quite interesting when I think Reuters was the one who actually reported that the Minister of Finance made mention about tapping into some of the proceeds from the Euro bond to actually subsidize fuel. So I think it's quite worrying that we have to still go back into this issue of subsidies, right? These are things that are of great concern to us. What can we do as a people, as a nation? So I kind of admire what the CBN is doing through its intervention programs to ensure that smallhold businesses are able to at least find capital to sustain themselves. There was this recent clip I was watching with respect to the agricultural small and medium scale investment scheme that the CBN introduced, whereby they provide loans to small and medium enterprises to actually be able to find their feet, right? So I think it's a good way to go, but you might then ask yourself, to what extent can the CBN go about trying to intervene in the real sector in all these things, right? So I think it's also quite important that if the federal government is, because you need both the fiscal and the monetary side to work together. If the federal government is going to spend, let them spend on things that are very important to the people, right? Things that actually improve the living standards of the people. We're talking about things like infrastructure, right? It goes a long way. There's a lot it can do in terms of employment and also in terms of facilitating business, right? A lot of people are complaining about the power sector. We heard about how the national grid actually collapsed twice, right? So I think there's a lot of investment we need to do in that space, right? I think we need to channel effort towards that space. And for every money that we borrow, we actually use it for the purpose we actually took it for. I was looking at your news where it said that Nigeria recently issued the bond. I think that was about 1.25 billion or so. Right, so if we're going to borrow this amount, we have to use it for the right purpose, and it's very important that we hold government to account, right? It's very, very important that we have these conversations with government and we hold them to account. That's what I see.
Let's wrap up on this note now. How do you see us finally consolidating on CBN's drive, for increasing local production? A lot of moves by the central bank. At the point, I was even thinking they could get overwhelmed. Agriculture, creative space, pharmaceutical space, just mention it. Cotton, textile. CBN is involved in everything. What do you think? Where do you see us finally consolidating all of this?
Well, that's a very interesting and important question, right? So I think it all boils down to the fiscal side, still trying to work in conjunction with the monetary side, right? It's quite important. The CBN, like you rightly said, there's a limit to what it can do, but it still has to do what it does, right? Through its intervention, I don't see it stopping anytime soon. So I think it's time we hold government to account, right? I think it's time we try to ask questions, right? It's time we try and elect the right people who can actually do the job, right? So in terms of what the CBN is going to do around what it's doing, I see the CBN still holding its stance with respect to the MPC rather
MPC,
holding its
yeah?
stance with respect to the interest rates, the rate, right? And
all of it.
That's what I believe. Yes, I think that's the right way to go. Then I think one other important thing is just to ensure that borrowings, right? So borrowings, giving loans to the private sector such that they're able to use such monies and such funds to actually improve their businesses. I think that way, and as long as the fiscal side is attending to things that it ought to attend to, things like security, things like ease of doing business, I think that way Nigeria will be able to at least be able to go through the storm that we're currently finding ourselves in.
Great stuff, and we would also definitely have you in house to also analyze this and break it down for us today on that very when we get to that point and we start to see the proceeds of all of these moves by the central bank. I am interested in seeing the positives of all of these moves because the interventions are really, really laudable. That's much time can take. I must thank you. Interesting conversation as usual. I've been speaking to Mr. Abiodun Kayode Ali. He's with PwC and is an economist and a tax manager at PwC. Thank you so much. I really do enjoy your weekend. We appreciate this.
Thank you for